Okay, so I'm starting the class now. So on in our last class, we have completed this non-recurring expenses and recurring expenses. Now we will be doing accounting treatment. Today we will do this accounting treatment. We will learn how the consigner and consignee records all the transactions in their books of account. So first we will go with the books of consigner. Yes. So the first entry is for the goods dispatched to the consignee. Goods dispatched to the consignee. The first entry we made, goods dispatched to the consignee. When a consigner dispatch the goods to the consignee, for that thing, for that transaction, the consigner will do a journal entry in their books of account, and he will write that consignment account debit, because because consignment is happening here, consignment is taking place here. Consignment account debit to goods sent to the consignment account, to goods sent on consignment account. The second entry for the same will be expenses incurred by the consigner. Expenses incurred by the consigner. So consignment account debit to cash or bank account. Whatever expenses like freights and all, whatever expenses consigner is bearing, for that we will be doing this entry consignment account debit to cash or bank account. Advance made by the consignee. Advance made by the consignee. So cash, bank, bills receivable, all these things, if any of this, either cash, bank or bill receivable account debit to consignee's account. Because here we are receiving the cash. That's why we have debited the cash, bank or bills receivable against the consignee account. Bills received from the consignee discounted with the bank. Bills received, if in case we have received bills from the consignee, then in that case, if we are going to discount that bill with the bank, then the entry of the same will be bank account debit, discount account debit, two bills receivable. Two bills receivable. Here we have received the bill, so we have debited it. Now we are discounting it with the bank, so we are crediting it here to nullify the effect of bills receivable. Receipt of account sales for the consignee. Receipt of account sales from the consignee. For sales made by consignee, consignee account debit to consignment account. For consignee expenses, if consignee is bearing any expenses, so consignment account debit to consignee's account. For consignee commission, whatever commission we are paying to the consignee, for that we will be passing this entry just like consignment account debit to consignee account, being commission payable on sale proceeds. Sixth entry, goods returned by the consignee. Goods returned by the consignee. Goods sent on the consignment account debit, because we are receiving those goods which we have sent earlier on the consignment, and to consignment account. In this case, we will credit the consignment account. When we have sent, when we have sent the goods on consignment, we have passed the journal entry of its opposite, like consignment account debit to goods sent on consignment account. Now we are getting some of the goods back in our firm, so that's why we have reciprocal this entry, and the entry will become goods sent on consignment account debit to consignment account. Seventh, bad debts incurred. Consignment account debit to consignee's account. Remittance by consignee in full settlement. Remittance by the consignee in full settlement. Cash, bank, bills receivable account debit to consignee account. Profit profit or loss on consignment. If there is any profit, then the entry will be consignment account debit to P&L account. And loss account debit to consignment account. Profit and loss account debit to consignment. Closing entry for goods sent on consignment. The entry for the same would have been like goods sent on consignment account debit, goods sent on consignment account debit to trading account, because we are passing the closing entry for goods sent on consignment. So that's why we are debiting the goods sent on consignment account to trading account. Unsold stock with consignee. Unsold stock with consignee. Consignment stock account debit to consignment account. Consignment stock account debit to consignment account. Now these were the entries. Now we will see how we will create a consignment account, or how a consignment account looks like. Here we have the performer for the same. This is the consignment account. This is the performer of consignment account. As you can see, we have debited all the things. We have debited all the things, like in starting we just do send the goods on consignment. So the first entry would have been consignment account debit to goods sent on consignment. The second entry is like if we are bearing any expense, so consignment account debit to cash account, and so on and so on. It's just a ledger posting of the journal we just read. In Sorry, I lost the connection. Let me present the study material to you once again. Just wait a minute. I'm trying to share the study material. Just wait. I guess there is an issue. I'm just presenting the study material. I don't know why it's taking so much time. Okay. This is the consignee account, and we will do a illustration for the same. But before that, we will learn how we do journal entry in the books of consignee. In the books of consignee. So in the books of consignee, the first entry consignee will pass when he received the goods, when he or she receives the goods. And for the same, there will be no entry. Means whenever the consignee receive the goods from the consigner on consignment project, then for the same, no entry will be passed in the consignee's books of account, and the expenses incurred by the consignor as well. For that as well, no entry is passed by the consignee in their books of accounts. So the first entry in the books of consignee would be advance made by the consignee. If consignee have made anything in advance or did some payment to the consignor in advance, for that thing, the entry would have been like consignor account debit to bank or bills payable. Bill discounted by consignor with the bank, no entry is passed because consignee have provided the bills payable, and it's up to the consignor now. Whatever he or she want to do with that bills receivable, if they want to discount it with the bank or not. It's in their book. It should be mentioned in their book, not in the consignee book. So we will not pass any kind of entry in the consignee's books of account. And for the fifth, sales of goods by the consignee. Sales of goods by the consignee. Cash account debit, consignment debtors account debit to consignor account. To consignor account. Sixth, expenses incurred by consignee. Expenses incurred by consignee. Consignor account debit to cash or bank, because ultimately all the expenses consignee is bearing, he or she will take that money from the consignor only. So that's why we have debited the consignor account here. Consignor account debited to So yes, where were we? We were at the sales of goods by the consignee. We've done this. Expenses incurred by consignee. Commissions due to consignee. Yes, the seventh point. Commissions due to consignee. For this entry or for this transaction, we will pass the entry like consigner account debit to commission account. We haven't being in consignee, we haven't received any kind of commission till now. We just did this entry for the due. It is due on sales. Return of goods to the consignor. So no entry will be passed in the books of consignee because we haven't passed any entry when we received the goods sent on consignment. We haven't passed entry for the same, so we will not pass when we return goods to the consignor. Payment received from debtors, cash or bank account debit to consignment account debit. Cash or bank account debit to consignor to consignment debtors account. Bad debts incurred. If consignee doesn't get the debt commission, all bad debts have to be borne by the consignor himself. As we have read, this debt commission will provide a guarantee or assure the consignor that he will be paid. He will be paid. So if consignee doesn't get debt commission, so all the bad debts have to be borne by consignor himself. The entry would have been like consigner account debit to consignment debtors account. If delicate commission is paid to the consignee, then the entry would have been like bad debts account debit to consignment debtors account. Remittance in final settlement. Consigner account debit to cash or bank account to bills receivable account. Unsold stocks in possession of consignee. Unsold by the consignee and account. So that's why we don't pass. Consigner's personal listening postage goes with the commission amount. Now, direct recording in the ledger. Sometimes we just direct record all the transaction on consignment in the ledger. We skip the journal part. We skip the journal part. And how do we do so? By making just simple ledger account. By making simple ledger account. Unsold stock. This is the ledger account, just creating the simple ledger account. We just skip the journal part, and after the journal part we use to create ledgers, we just go straight to the ledgers account, and that's how it is done. It's as simple as that. Now, unsold stocks. See, whenever we get a consignment, suppose we have got 2000 units of goods on consignment, and out of that only 1500 goods were sold by the consignee. Only 1500 goods were sold by the consignee. So the 500 goods which were left in the firm, okay, or uh, in the position they are unsold, for that what entry would have been done, or for that what valuation we would use to either we just resend those goods to the consigner, or we will try, as a consignee we will try to send or sell those goods in our next consignment. Sometimes what consigner do, consigner just ask the consignee to keep that good by him or herself, so that whenever the next unit or the next consignment, the consigner will provide the consignee. So on that consignment, that goods will be sold by the consignee. That's how it is done. But these unsold stock should be valued, means the valuation of unsold stock should be done. All those expenses incurred till the goods reach to the godown of consignee, you should note that all non-recurring expenses, because those are the one-time expenses. Those are the one-time expenses. Following expenses are usually added for calculation of closing stock. For calculation of closing stock. Carriage and freight. Carriage and freight. Loading charges. Custom duty. Clearing charges. Dock dues. Carriage paid up to the godown. Carriage paid up to the godown. Unloading charges. Unloading charges. So following are the expenses which are not considered for the calculation of closing stock. Just like go down rent, discount, bad debts, insurance of goods in the go down, selling and distribution expenses. And why is that so? Because those goods were stayed in the go down only. Those goods were stayed in the go down only. So no discount, no bad debts, no selling and distribution expense, no insurance of goods in the go down, and that's it. We will take an illustration number 5 for the same. Just read it from here. A sent goods worth rupees 10,000 to B and paid rupees 1200 for packing and rupees 800 for insurance. B took the delivery of goods and paid 2000 for freight, rupees 400 for cartage and loading, and rupees 600 for go down rent, and rupees 400 as selling expense, and rupees 800 for insurance. B sold three-fourths of the goods for 1800 rupees. Okay, calculate the value of stock. Calculate the value of stock. Cost of unsold stock. Cost of unsold stock. See, three-fourths of goods were sold. So three-fourths of 10,000 is sold, means remaining 1 by 4. Remaining one-fourth of the goods are unsold. One-fourth of the goods are unsold. And when you do 1 by 4 of 10,000, the unit comes like 2,500. 2,500 goods are unsold. The non-recurring expenses are like 1,200 for packaging, okay, and 800 for insurance. Now we took the delivery of goods and paid 2,000. This will be added. This will be added because it's free. The cartridge and unloading charges will be added. This 600 rupees will not be added in the valuation of unsold good, because we do not add go down rent. We do not add any selling expenses. We do not add any insurance which was done in the go down or done by the consignee. We do not add these things as it is mentioned here. So according to formula, we just add these things, 1,200 plus 800. These are the non-recurring expense. These expenses are incurred by the consignor. All expenses incurred by the consignor would be added here, and all expenses like unloading and cartridge and freight, means goods expenses spent, the money we spend on those goods till the go down. Once they reach the go down, we will not add any kind of expense in those unsold goods. So that's why we have added this 2,400 rupees. So this is 4,400 value of closing stock. value of closing stock would be cost of unsold stock. Cost of unsold stock would be 2500 plus non-recurring expenses into cost of unsold stock into cost of goods consigned, means 2500 by 10,000 into 4400. Or you can just do one simple thing. See, this is the one fourth of 10,000. These were the all the goods. Okay. Now, this is the expense on 10,000 rupees good. This is the expense we have created on this 10,000 rupees good. But we just need the expense for one fourth of this good. Just do one fourth of this. Just do one fourth of this into 1 by 4. And the amount will come with 1,100, and you just need to add it and you will get the value of unsold goods or value of closing stock. This is the value of closing stock. That's how it is done. Accounting treatment of unsold goods. How we will treat it? By passing this entry: consignment, uh, consignment stock account debit to consignment account, consignment stock account debit to consignment account. Coming to the loss of goods. Loss of goods. Loss can be of two types: normal loss or abnormal loss. Either normal or abnormal. Normal loss is, it is a loss which is due to inherent nature of goods consigned. It may arise in the process of loading or unloading. Your goods can be damaged in the process of loading or unloading of goods, breaking out of bulk pieces into smaller ones, weighing due to evaporation, processing, etc. For example, while loading or unloading or weighing coal, some part is bound to fall down in powdered form. Similarly, the petroleum products are bound to lose weight due to the evaporation or leakage. So these are the kind of normal loss. But the losses happen due to any a natural calamity. These are the things called abnormal loss, like fire and all. These are abnormal loss. The cost of normal loss is spread over the remaining unit, thereby increasing the cost per unit of the goods. For example, 10,000 ton of coal is sent on consignment costing 100 each. The normal wastage is the normal wastage is that is 200 tons. Okay, let us see how normal loss leads to an inflated cost price per unit. The total cost of 10,000 tons of coal is 10 lakh. 10,000 into 100, it will be 10 lakh rupees. Total units were 10,000 tons. Normal loss, it is 200 tons. The remaining units, it is 9,800 tons. 9,800 tons. So, rupees 10 lakh will now be the cost of 9,800 tons, because these 2,000 tons have got wastage. They have gotten in this wastage. So, this value remains for 9,800 tons, not for this 10,000 units. This remains for this 9,800 tons only, and the cost per unit will be therefore 10 lakh 10 lakh divided by 9800, 10 lakh divided by 9800, and the amount for per unit will be 102.4 approximately. If there was no wastage, suppose if there were no wastage, so the per unit cost would have been like 10 lakh divided by 10,000. 10 lakh divided by 10,000. So this is the cost, 100 rupees. Here you can see this is the cost of each unit, means 100 rupees. Now when we have some wastage, the cost have increased by 2 rupees 4 paise. 2 rupees 4 paise. This is the difference. This is how it rise the price. It rise the or loss, any kind of loss, inflate the price of any unit. Abnormal loss. The loss which occurs due to negligence, inefficiency, or some accident is treated as abnormal loss. Loss of goods due to fire, flood, earthquakes, riots, war, theft, etc. These types of loss are known as abnormal losses. Abnormal losses. Abnormal loss is calculated in same manner as the value of closing stock. Means there won't be any difference in calculating the loss. But we can insure this abnormal loss. Sometimes we do insurance of our goods. Sometimes we do insurance of our goods. And this insurance can be partially or fully. Partially or fully. So we have three types. Either our goods could be uninsured, or partially insured, or fully insured. And the entry for the same would be like, if our goods were uninsured and any natural calamity happened and destroyed our goods, so the entry for the same would have been like profit and loss account debit. Profit and loss account debit to abnormal loss. To abnormal loss. If the abnormal loss is fully insured, if they were fully insured, the entry would be insurance company account debit, because now insurance company will take care of our loss. Insurance company account debit to abnormal loss. To abnormal loss. But if in our case, suppose our goods is of 100 and out of those only 60% were insured and 40 were not, so in this case, this is the case of partially insured goods. Partially insured goods. In this case, insurance company account debit 60 were insured, so 60. Profit and loss account debit 40 were uninsured. So the 40 for the profit and loss account, two abnormal loss, abnormal loss, 100. That's how we do entry of abnormal losses. Yes, it's all about this consignment account. Now we will be moving forward for next unit. Yes, consignment account second. Consignment account second. Concept of invoice price. Concept of invoice price. As you know, invoice price includes two things. First is cost price plus the profit plus the margin we take before selling the goods. That is known as invoice price. It includes margin as well with the cost price. Let's read it from here. Sometimes the consignor doesn't want the consignee to know the actual cost of goods sent to him. Therefore, consignee the goods at a price other than the cost price. Such price would generally be higher than the cost. Means if our goods cost, suppose you are the consigner, you are the producer or manufacturer of the good, and want to send your goods to the on the consignment to the consignee for the sale purpose. Now you do not want the consignee know the actual price of those goods. Okay, actual cost of those goods. Suppose those goods cost 100 rupees per unit to you, to being a producer. they cost 100 rupees per unit. Now you do not, as you do not want to want the consignee to know the actual amount or actual